Wonderful good day, ladies and gentlemen. It's day 4 and the final day of the PDAC here in Toronto 2016, and we are now at the booth of Pershing Gold, you know, the well-known emerging gold producer out of Nevada. And with me here is Steve Alfers, the CEO of the company, and we want to have an update, of course. Steve, good morning.
Good morning, Johan. Thank you for your interest in Pershing Gold.
Yeah, thanks for taking the time, of course, as I know everybody's very busy at PDAC. Pershing Gold, we have done a lot of interviews so far. I had Jack Perkins, your Vice President IR, in January in Vancouver, but since then a lot have happened. So please advise a bit. You had a financing also.
Yes, we did. I'll bring you up to speed. Your audience is pretty well informed on Pershing Gold, and I appreciate your following us, and I appreciate the interest from your audience here. Well, this year we just last month completed a financing. Very important to us. It was something in excess of $8 million US. What that does is give us the running room that we need to take us through this fast track to get us toward production through in 2016 and 2017. So we have now the running room to do what we need to do. And what we need to do straight away is to complete a new resource. We completed a very large drilling program in 2015, and we'll soon see the results of that. This was an infill drilling program.
When they are coming out, the results approximately, what do you think?
I'd expect that in a matter of weeks.
So we have news flow.
Should be some news coming out quite soon.
Good.
Immediately on the heels of that resource, we will start the preparation of the PEA to determine the economic feasibility and the timing of the startup of the Relief Canyon mine. Now, the third thing that we'll have coming down the road here very soon will be to announce our drilling program and development program for the rest of 2016. That's a work in progress right now, but in the next 2 or 3 weeks we'll be in a position to announce that program.
How large will it be money-wise?
Remains to be seen, but I'd expect us to be in that range of maybe $2 million on the low side up to 4 or more on the high side. Now we'll have a couple of objectives there. We're going to continue to expand the deposit. We'll see a little shift in our strategy here this year. Last year was all about closer space drilling with core in order to gain a high level of confidence in the ore body that we'll expect to start with the mine. Next year you're going to see us stepping out and looking to expand that the deposit, and we will continue to test targets in our 50 square mile land position that we have there.
A huge
so it'll be a
position.
somewhat change in our strategy there.
Yeah, absolutely. Great. We are always talking about of you as an emerging gold producer because you are on the path to production. We have also here in the background, you have already nice facilities. Yeah, I'm sure there has to be done maybe a little bit of work, some upgrades, etc. But can you give us an idea what is needed now that you have a resource already? You will have a new one, as you said. But what do you think is needed to really finally go into production? How much money? Just an estimate. I know it's a speculation, of course. Yeah, but do you need, let's say, 10 million or closer to 50 or 100, just to give our viewers an idea how close you are?
The cost for initial capital to get into production is really pretty low because, as you say, we have the infrastructure in place there. We have some improvements we want to make with it. These are not long lead time items or construction projects or anything like that. It's more or less equipping some aspects of the facility and the like. So the initial capital to get started there is something in the range of 10 to $12 million.
Well, that's really manageable.
It's pretty manageable.
Yeah.
Now, you are suggesting that what will our capital needs be going forward, and I have to say that remains to be seen. Because we have cash in the bank right now, and when we get to that feasibility stage, we'll be able to forecast the timing of the startup as well as what the last round of needs are going to be to get started there. So I'm not saying there is going to be any need for further financing. We'll make that determination within a few months.
Yeah, and I mean also, $10-12 million, as I would see it as an investor in Pershing also, I would say with your shareholders, this shouldn't be a problem. I mean, Barry Honig, Dr. Frost, they will back the company for sure. I believe that. Yeah, and when they see the opportunity to go into production, could imagine they use it.
They've been very supportive up to now. Barry Honig led the group in our last financing around, so we've been very fortunate to have continued support from our existing shareholders here. And though you wouldn't think so today, but over the past year, markets have been very difficult, and having that kind of loyalty from our shareholder base has been one of the 2 or 3 differences between Pershing as an investment opportunity and everyone else.
Absolutely.
Now the other one, you also really invited me to comment on this low capex really leads to low cost production for a company like this.
That would be my next question, yes.
We have facilities in place, the infrastructure is there, so we're not looking at a lot of capex to invest in. So that kind of financing risk is very modest for us. The other is, this is a project, and in our news releases of last year, we were telling the investors that they can expect this to be also a low operating cost operation in the 700s as an all-in sustaining cost.
$700 per ounce cost,
Yeah. And the work that we've been doing with our close space drilling has only increased our confidence in those costs. I'm not sure what they're going to be. We'll have feasibility results here in the next couple of months that will declare all that. So if anything, I'd expect to see costs heading downward.
Oh, that's good. Good
as
to hear.
we look at, and in a time where we've got a rising market in gold, gold's now at, for us, a very strong 1250 or close to 1250. With the new trading range, it seems like it's moving higher. Fundamentals for gold look very good to me. So this is frankly a good time for emerging gold producer sector of this industry.
Absolutely. So now we have defined the costs. They are very low. We have defined the capex. It's also low to go into production. Where do you see the time frame for it? Can we expect I mean, now it's 2016. Let's assume gold goes this year to 1400, which is absolutely possible. Yeah. So you would have a beautiful margin on your project. So I think it might make sense to go in production soon.
Well, I mean, we have a little bit of running room in order to get there. We need the resource. I need the economic analysis. So that pushes us out toward mid-year for approaching with our directors and with our investors, the decision on the timing of the restart of the mine. And then at that point, it's a matter of just looking at the logistics in considering even the weather about the timing of the startup here. But once that decision is made and the kind of price environment that you're talking about, this project one day will be a mine, one day soon.
One day soon, that's what I wanted to hear. Great, fantastic. Final question is, you have no debt, obviously?
No debt.
How much money is now in the bank after the financing? Can you determine that?
I mean, off of the public documents, you can see that with the financing, we were starting with something closer to 13, 14 million. We burned up some of that. You know what our burn rate is. So we're down something north of 10, 12 million.
Super. So you're well cashed up with that. Even for the mine start, you have some money in the bank, so you mustn't even raise the whole amount if it comes then to that. And we can say maybe, hopefully 2017, there might be a production. Hopefully. Of course, I know. You have to make the decision.
I myself am predicting it and counting on it.
Okay, super. Great. Stephen, thank you very much for that. And keep fingers crossed and keep up the good work. I like it. And I want to see this producing here because it looks terrific.
Well, thank you for this interview and thank you everybody for tuning in to see how we're doing at Pershing Gold.
Great, thank you. Yeah, ladies and gentlemen, that was Stephen Alfers, the CEO of Pershing Gold, and you heard it. It is, on the way to production. It is an emerging gold producer. There are north of 10, 11 million are in the bank, so the company is pretty safe, pretty fine, well financed. And as he said, the all-in sustaining cost will be around like $700. So that would be a great margin when they go to production. We can I can say for sure they will be well below maybe 1,000, maybe 900 all-in costs. So pretty good, pretty healthy, and they are located in Nevada, so safe jurisdiction. This is top mining jurisdiction, top mining country. Check out the company. Thanks for watching us. Bye bye from Toronto.